Hey everyone, welcome back to the channel. If you're new here, don't forget to hit that subscribe button and give this video a thumbs up if you find it helpful. Today, we're diving into the world of investing, specifically looking at two hot but very different asset classes, real estate and Bitcoin. Both have made millionaires, but both come with their own set of risks that you absolutely need to understand before you invest a single dollar. We're going to break down the top 3 risks for each of these investments so you can make smarter, more informed decisions. Whether you're just starting your investment journey or looking to diversify your portfolio, this video is for you. Let's get right into it. So, you've probably heard the saying, real estate always goes up, right? Wrong. Just like any other investment, real estate markets are cyclical. They go up, they go down, and sometimes they just like to hang out sideways for a while. What does this mean for you as an investor? It means that the property you buy today for, say, $500,000 could be worth $450,000 next year. Or $400,000. If you're forced to sell your property during a down market, you could end up losing a significant chunk of your investment. Think about the 2008 housing crisis. People who bought at the peak of the market and were then forced to sell during the crash lost their shirts. Understand the risks, do your homework, and be prepared for the possibility that the market might not always go your way. Now, let's talk about liquidity, or in real estate's case, the lack thereof. Liquidity refers to how easily you can convert an asset into cash without significantly impacting its price. Real estate, on the other hand, is more like trying to trade a Picasso painting for groceries. It's not impossible, but it's going to take some time and effort, and you might not get what you think it's worth. If your money's tied up in real estate, you're not going to be able to liquidate that asset overnight. It takes time to list a property, find a buyer, negotiate a price, and close the deal. This lack of liquidity can be a major drawback for real estate investors, especially those who prefer investments they can easily access if needed. If you're someone who values liquidity, you might consider diversifying your portfolio with more liquid assets like stocks or bonds to balance out the illiquidity of real estate. The key takeaway here is simple. Understand the liquidity constraints of real estate and make sure it aligns with your personal financial goals and risk tolerance. Let's talk about a reality of real estate investing that nobody likes to talk about: the hidden costs. People often focus solely on rental income. But what about the never-ending list of expenses? Property taxes, insurance, maintenance, HOA fees, and unexpected repairs. Remember that leaky roof you didn't budget for? Or that plumbing issue that popped up out of nowhere? These can eat into your profits faster than you can say depreciation. And then there are the costs associated with being a landlord. Advertising, property management, legal fees, these all add up. Real estate can build wealth, but know the costs. Now, let's shift gears and talk about Bitcoin, the digital gold that's been making headlines and turning heads for the past few years. Bitcoin is fascinating, it's innovative, and it has the potential to revolutionize the financial system. But it also comes with its own set of risks. And the biggest one is volatility. Let me tell you, Bitcoin is not for the faint of heart. It's like riding a roller coaster in the dark. You never know which way it's going to go next. One day, you're up 10%, feeling like a financial genius, and the next day, you're down 20%, questioning all your life choices. These wild price swings are enough to give even the most seasoned investor a serious case of whiplash. The key takeaway here is this: if you're considering investing in Bitcoin, you need to have a high risk tolerance and be prepared for some serious price swings. Don't invest more than you can afford to lose, and remember that past performance is not indicative of future results. Let's talk about another big risk associated with Bitcoin regulation: See, Bitcoin operates in a bit of a gray area when it comes to regulations. Governments around the world are still trying to figure out how to classify it, how to tax it, and how to regulate it. This uncertainty creates a level of risk for investors, because a single regulatory announcement or policy change could send the price of Bitcoin tumbling. Imagine a scenario where a major government decides to ban Bitcoin outright, or impose strict regulations that make it difficult to buy, sell, or use. Such a move could have a devastating impact on the value of your investment. We've already seen how regulatory announcements can cause significant price swings in the cryptocurrency market. Remember when China cracked down on Bitcoin mining? The price plummeted. The point is this: regulatory risk is a real concern for Bitcoin investors. Be aware of the risks and make informed decisions accordingly. All right, let's talk about the final risk we're covering today: security. See, Bitcoin is a digital currency, which means it's vulnerable to cyber attacks and scams. And unlike traditional financial institutions, there's no central authority to help you recover your funds if something goes wrong. One of the biggest security risks is hacking. We've seen countless examples of cryptocurrency exchanges being hacked, resulting in millions of dollars worth of Bitcoin being stolen. And if you're storing your Bitcoin on a personal device that gets lost, damaged, or stolen, well, consider that Bitcoin gone forever. Then there are the scams. From phishing attempts to fake ICOs, initial coin offerings, scammers are constantly coming up with new and creative ways to separate you from your hard-earned Bitcoin. So, how can you protect yourself? First and foremost, educate yourself about the different types of scams and how to avoid them. The bottom line is this: security is paramount when it comes to Bitcoin. Be vigilant, be informed, and take the necessary steps to protect your investment from cyber criminals and scammers. So, there you have it. The top 3 risks of investing in real estate and Bitcoin, and how you can protect yourself from potential losses. Remember, no investment is risk-free, but with the right strategies, you can minimize your exposure and sleep better at night. We covered real estate's market fluctuations, illiquidity, and those sneaky hidden costs, plus Bitcoin's wild volatility, regulatory uncertainties, and the ever-present security concerns. But remember, knowledge is power, and by understanding these risks, you're already one step ahead. If you found this video helpful, make sure to like, subscribe, and drop a comment below if you have any questions or suggestions for future videos. See you next time, and happy investing!